Good afternoon, everybody, and welcome to Thursday's Daily Market Insight video here on December 2nd, just a couple minutes after market close, 4:02 p.m. Eastern Time here in Jacksonville, Florida. In today's video, we've got the indices bouncing, but we're going to talk about whether or not the selling is over, possibly what tools you can use in your toolkit to help identify when it is or some changes in trend potentially. Additionally, we have trend gauge changes, more of those coming today. We're going to go over that in just a second. But first, let's talk about what just happened. So market bounces led by small and mid caps and DIA, or the Dow Jones Industrial Average. You can see performance-wise there, both mid and small caps up nearly 3%, Dow up nearly 2%, S&P up about 1.5%, and the Q is the laggard of the day, up 0.75%. G5 pretty strong today, even though a lot of those have gotten beat up really bad, up 1.5% as well. The state remains the same, correction. Nothing has changed in that regard from Don's video on Tuesday. However, we do have changes to the trend gauge. As I mentioned, we have market leaders going from neutral to bearish, right? So that technically happened yesterday, but just over the course of this week, we've had 14 of the 21 over 21 names break the 21 this week. So we've downgraded market leaders. There's still a very small select few that have held up okay, but for the most part, most leaders are starting to show signs of cracking. Short term, we're below the 21-day exponential moving average on all the major indices. S&P now with a handful of closes below, Qs now with their second close below. So short term has been moved to down or bearish as well. And we do have some small changes here on the medium and long term, right? So we moved this yellow arrow a little further towards neutral on both of these. And the reason for that is IWM continues to live below the 200-day for one. And you've got the Dow and mid caps undercutting the 200-day and reclaiming it today, but both of those below the 50. And then you've also got the S&P undercutting the 50-day yesterday, reclaiming today, and the Qs still above the 50. So once we see the Qs in the S&P, if they do move in that direction towards below the 50-day, that's when you start to see more changes come on that medium term range, as well as the same thing for the 200-day. So very small changes, more bearish on the medium and long term. And then you got a big change here, a big arrow change, right? Neutral to bearish or neutral to down on both market leaders and short term. So before we get to the charts, as I always do, let me reference the team here at Revere. This is me. If you have any questions, send me an email, hunter@revereasset.com. Happy to answer your questions, communicate with you, whatever the case may be. If you're interested in what we do, what our strategy is, you can email myself, or you can email Dan, Tim, Merrill, Alex, or Don at revereasset.com as well. So let's get right into it. We're going to start here with the S&P. As you can see, bouncing off of this 450 level, right, which is going to correspond really to the 100-day. I don't have that really on the charts right now. My pink line is this 8-day because I also think it's important for what we're going to talk about today. But the 100-day moving average is right here on the S&P. You've also got this previous pivot here right around 450, 454, and you've got the reclaim of the 50-day. So we actually closed out our S&P 500 hedge today, and we started a hedge on the Qs. We're going to look at the Qs chart here in just a second, but for the time being, the S&P bouncing off this level, getting back above the 50-day, what we would be looking for, and what I partially want to talk about here in regards to the question, is the selling over, right? We've had a decent little pullback on the S&P and the Qs the last week. Small caps have been hitting worse. But what I'm watching particularly here on the S&P is I want to see a close or two closes above the 8-day and above the 21 before I really feel like things have started to turn around. Because right now, as you can see with this pink line, it's starting to look like we're in a downtrend on the S&P. And you'll see that the other indices look very similar. So until we can get back and show two consecutive closes above the 8-day and then above the 21, that's really kind of my line in the sand for what I'm looking for. And you'll see here, the follow-through day was on 10/14, right here. Well, you got two candles here on the S&P closing at the top of their range, getting back right to / above the 8-day, and then big time follow through the next day. That's positive action after some really ugly selling here over the course of about 3 weeks to a month in the end of August through September, beginning of October. So that's the kind of action I would look for. It would be really strong moves to the upside, closing at the top of the range, getting back above the 8-day and the 21-day. And that goes for really all of the moving averages or all the major indices. You want to see them get back above those key levels. So the Qs I mentioned, we started a short today as it ran up into this overhead 21 and wasn't able to quite get back above it. So the Qs have held up the best. We've talked about that. But now we've had 2 closes below the 21. We've got the 8 almost crossing through the 21. So you got the last best looking or the last man standing index here starting to kind of falter and break down a little bit. The 50-day just within a stone's throw, about 2% down there. So we've gone from big time breakout here to starting to look not so great pretty quickly, only just a little bit from the 50 there on the Qs. And next, let's go to the Dow. Since the Dow was strong today, we talked about the reclaim of the 200-day, but once again, what's important here, not able to get back above the 8-day. You can see we've gapped down, the 21 almost crossing through the 50. That's the big thing I'm watching is, can we get back through the 8-day, back through those overhead moving averages like the 50, like the 21 on the Dow. There's going to be days like today where you're up, 2% on the Dow, but we're still inside of yesterday's candle and right here sitting on the 200-day. So I would be cautious, look for more confirmation to the upside, more closes at the top of the range above those moving averages. And then IWM is the worst of the bunch here, the ugliest, the nastiest, whatever you want to call it. Same story, rejected at this overhead 200-day yesterday, and then also corresponds to rejected at the declining 8-day exponential. Same thing. I would want to see more closes above that 8-day exponential, get that moving upward instead of down, and then also getting back above those moving averages. And then MDY is more or less a replica of DIA in regards to the chart. Undercut the 200 yesterday, right back above today. Really what happens the next couple of days here with these is what's going to be indicative or important moving forward, in my opinion. Does it hold this 200, get back above those moving averages, or does it consolidate here for a second and then break lower? That's kind of what we're looking at, what we're watching for. So there is the indices. Now let's talk about something else today that had a failed breakout. TLT, right? The Treasury Bond Etf, and it actually came back a little bit at the end of the day. But this tried to poke its head above this 152.71 area here and ultimately came back. And I'm going to show you a 5-minute chart so you can see what I'm talking about. Ultimately failed throughout the day, came back at the last little bit here, but TLT, a failed breakout, that is a flight to safety type of trade, a safe haven for risk off, more or less. So TLT, failed breakout, really just kind of sitting right there at the pivot. So it'll be interesting to see how that does, just something to put in you guys' head to monitor. Now let's go to some of the stuff that had a good day today. Let's go to some of the things that were strong. Now, although these charts may not look great, what we want to highlight is what was strong today, regardless of how the charts looked. And these are good stocks here. So we're going to go through these. FANG right back up into the moving averages. You want to see it get back above today's high and the last couple of days' highs. But FANG up 3%. We saw XOP, the oil and gas exploration ETF, one of the stronger names today after a really ugly open. These gapped down at the open, ended up being one of the stronger names. DVN, also another oil name that ended up being up 2% after a nasty open, still not back above the last couple of days highs, not back above the 21 or the declining 8. But the 8-day and the 21 are going to become imperative for a lot of these stocks, indices, ETFs, whatever it is that bounce after a sell-off. Those declining moving averages, we've really got to pay attention to those. So DVN, FANG, XOP, those names strong today. Home builders, DHI, DR Horton, incredibly strong today, really bucking the trend of the weakness recently, holding up well, staying above the 21. Toll Brothers also strong today. I'll show you ITB. This is the Homebuilder ETF. Looks very similar to DHI. NVIDIA up nicely today. One of those very few that's held up really well that I've talked about. So one of the last individual big leading stocks that's held up above the 21 and the 8-day. NVIDIA is still strong today. We also saw industrials, real estate having a good day today. So Granted, some of these things have been sold off really hard, so you want to keep that in mind. But nonetheless, XLI, XLRE showing some strength today. Real estate and the home builders, maybe one of the areas that's got the most strength alongside with semiconductors. That's something we've been seeing for about the last week. That could be one of those last areas to fall, or it could be one of the first areas to lead if we end up coming out of this pretty quickly. So also, I talked about this a little bit today, and we talked about this last week, but I want to highlight here the DIA versus the QQQ. I know we talked about it just briefly when we were at the beginning here, but up 2% versus 0.6, 0.7% on the Qs. That is typical when there's more fear in the market. You know, less people are wanting to own the technology and the growth. More people are wanting to own the safe haven stocks, right, like Apple and things of that nature. So just something to monitor. You see the Dow outperforming the Qs today, whereas we've seen the Qs outperforming the Dow really for the better part of the last 2 months. Roblox also up today. One of those last few still hanging on above the 21. Snow, very strong day today, has recently reported earnings, but a really incredible candle above the 21. But very, very, very volatile here on Snow. Also had Jets, the airplane, air travel ETF, up pretty big today. Still not a great looking chart here. And you had XLF, the financials chart, up big today. So some of the areas that have been beat up pretty bad, making a rally today. I think it's important to watch what happens over the next few days, the next week or two, and how they react. Do they continue lower, or do they snap this downtrend, get back above the 8, that kind of thing. So some of the losers from today, not necessarily a loser per se, but we did sell Microsoft today, sold the remaining piece of our position, just really reducing risk as it broke the 21. You can see the trend changing, right? The 8-day right here, this pink line, now resistance today, third close below the 21, not what you want to see out of one of the big leaders. Also, some of the crypto names getting crushed today. HUT down 12%, 11%, was down more than that at one point. Bitcoin wasn't down that much, so this is really just the miners getting hit. SI, another name that started to kind of break down a little bit here, one of the banks. You can see how volatile this chart is. It's an absolute mess up there above 200, all over the place. Some of the other speculative names, Lucid, car company, down pretty big today, breaking the 8-day, hadn't done that in a while. Bros, back below that 50 level. So some of these loose are more speculative, less liquid names, not necessarily Lucid and Bros being all that non-liquid, but some of the smaller and less liquid names have really been getting crushed recently. Upstart down now about 60% from its recent high. Just a brutal move for Upstart here. AMBA recently reported earnings. We sold this actually yesterday into the strength, and you can see the reaction today, down 2%, but pretty much filled the entire gap almost. And lastly, the lagging sector today, none other than XLK. So I mentioned the strong sectors, right? Industrials, real estate, financials, oil. The weakest sector of the day pretty much was technology. So just speaks to the fact that DIA really outperformed the Qs today. I mentioned we bought the Qs hedge, got rid of the S&P hedge today. So that is kind of where we sit. We are still pretty much in the same realm beta-wise that we were on Tuesday. And I'm sure Don will talk more in depth about that in tomorrow's video. But that wraps up my video for today. I hope you all enjoyed it. I'll see you on the podcast this weekend, and have a great weekend, everybody. Thank you.